Hey everyone, welcome to Trading Logics, and in this episode we're going to learn about breaker blocks. Now, what is a breaker block? A breaker block is when a demand or a supply zone gets invalidated but later becomes a retest zone. So looking at my chart right now, you can see that this was supposed to be our supply zone. We were expecting the price to drop. But let's say that there is some sort of demand zone here that caused the price to react from this area and breaking above the previous swing high, which is what we call a market structure break or a chalk. Once a chalk has appeared, the supply zone that was first appropriate but not now becomes a zone of breaker block. Now, some people might say, hey, isn't this supply and support and resistance? Well, it's not really. The difference between breaker block and support and resistance is support and resistance traders, they tend to draw one single line. For example, let's say that there is a market going up like this, they tend to draw one single line. But that's not true, because markets they're not that precise to a point that they will react to a single line. So drawing one single line is not accurate, and it never happens. You might get it once in a blue moon, but it's not realistic as a trader to expect lines to be a potent zone. So this is why when we're trading breaker block, we are using the invalidated order block or the invalidated supply block, which then becomes the breaker block. So that is it for breaker block. It's not that complicated. So let's get right into our examples. Here we have example number 1. Now, as we progress harder and harder, today we have 3 examples. But let's start with example 1, which is going to be the easier one. Example 2 is going to get more gradually harder. Let's start with example 1. So I propose you a 3-step method. I know whenever you are a beginner or an intermediate, even advanced traders, when they look at a very complex chart, they open up a chart and the first thing they know is, what is this? They don't know what they're looking at because it gets very complex and complicated. I understand how it feels because when you open the chart, you are like, what is this? What am I looking at? Where is the breaker block? Because in theory, it's so simple. But when you open up a real chart, all of a sudden, it's so hard. So here, I'm going to propose a 3-step method. Step 1. What is step 1? Step 1 is to simplify your chart. Now, you might have very complex structures and all. But if you boil it down, it is just simple. Swing high and swing low, lower high, lower low. Okay, the chart can look complex. I know it is. Sometimes I open the charts and it's so complex, I don't know what's going on. But I like to simplify it to simple lines. There are interior details, you can be a bit more precise, but you don't have to draw every single candlestick that you find. That is going to simplify it. So, does it look familiar now? I want you to focus on the gray box. Step 1 is to draw out the lines. You can do a very quick line, or you can actually change your chart settings. If I'm not mistaken, you can actually go to TradingView chart settings and you can change it to a line chart for a minute and just to visualize what's going on in this chart. Once you have finished step 1, which you might think unnecessary, but it's actually very important. No matter how good you are, even sometimes when I'm trading, I will literally draw out the lines. Okay, I would use trend lines, I would use path to draw out my lines clearly. Step 2 is to look at the left side of your chart. A lot of beginners, okay, not even beginners, a lot of traders sometimes, when they're trading, they're only looking at one side of the chart on what's going on. But they forget that the chart is not one-dimensional. It is two-dimensional. Okay, so you have stuff before. So please don't ignore anything in the past and actually go back in time. Don't go to the 1 minute, go to the 4 hour, go to high time frames. Doesn't matter if you're scalping or not, you need the high time frames. So this zone is the order block that we have. So once we have drawn out the order block, we can see that the price retested into the order block. Now as we zoom in into this area, we can see that the price, if we were to use step 1 again, it's just simple lines. But you can see the price failed to make a lower low and now create a higher high, breaking above this supply zone. Now it uses the entire area, it retests into the supply zone, and then, well, we went up from here. So how could we enter this trade? If we were in this exact moment in time, how would we enter this trade? Well, you would put an entry exactly at the breaker line. So what is the breaker line? Or we call it the breaker. A breaker is exactly at the tip of this order block. When we're trading breaker blocks, it's usually very precise. So we put our entries exactly above the breaker line. So now that we have a breaker line secured, we usually put a stop right below the breaker, which is around here. So once we have everything set, we can actually take a trade. As simple as that. So where would be your take profit? But for this video's purpose, we're not going to actually dive into how to exactly put your take profit. But let's just say somewhere here, 1 to 4. Usually when you're trading breaker block, you have a risk reward ratio range of 1 to 3 to 1 to 7. Of course, there is not a fixed range. You could do 1 to 2, 1 to 10, depending on you. But when you're trading breaker block, you do have the advantage of using higher risk reward ratios because breaker blocks usually have a smaller stop loss range. So this is it for example 1. So guys, this is example 2. Now example 2, I'm not going to draw out a gray box for you. Instead, I want you to find where the breaker block is. I'm going to specify it until here. Within this yellow box, I want you to find where the breaker block is. And yes, it is slightly subtle. Actually, the box is actually like this. I want you to find the breaker block inside this yellow zone. Pause the video and take up to 30 seconds to find the breaker block. Okay, if you did struggle to find the breaker block, well, let me give you a little tip. Okay, let's just draw out the gray zone and you will immediately find the breaker block. Is it familiar now? If you still cannot see it, repeat the 3-step procedure, and I do it all the time. It doesn't matter if you're an advanced trader, because simple steps like this simplify your chart. So let's start with the very basic. Move up, move down, lower high, lower low, lower high, breaking above, breaking below, retest, break, retest, pump. This one is the breaker block. Okay, so once we had broken below the zone, this becomes immediately a breaker block because we made a breaker structure. So this zone becomes a breaker block. So one thing tricky about example 2 is that some traders might mistake this zone as a breaker block. But why did this zone not react? Well, because order blocks and breaker blocks are usually much more potent. Usually the bigger the candle, the more reliable it is. Especially when we have one breaker block here and two breaker blocks here. When we have a scenario like this, we usually take the higher breaker block instead of this one, because this one is usually an inducement. If you do not know what inducement is, you can actually check out my previous video. So let's look at this one. Breaker block, how could we enter this thing? Say 3 steps. Step 1, we have drawn out the line. Step 2 is to look back onto your past chart, which is your left side, to find any order blocks. And step 3 is to find the breaker block correctly and then enter a trade. Let's say here, we target here, put a stop loss right below here. So as simple as that, you have another successful trade. Coming to our final example, now this one is a bit of a bonus. So can you find the breaker block here? This is quite easy, but it's hard to find. This breaker block isn't very complex. It doesn't have tricks. There are no traps, but this is very hard to find. So within this chart range, I want you to find the breaker block. So this is the zone I want you to look at. Pause about 30 seconds to 1 minute to find the breaker block. So hopefully you did find. If you did, congrats to you, because in this video, you've become an expert basically just to find breaker blocks. Of course, when you're trading breaker blocks, a little tip for you is that you want to incorporate other stuff instead of using, one single idea. When I'm trading breaker blocks, I don't like to use one single thing. Instead, I incorporate many different indicators. Okay, as in indicators, I don't mean MACD or RSI. Of course, you can consider those indicators. But when I say indicator, I usually mean, fair value gaps, which is ICT concept. So looking at here, where's the answer? The answer is here. This is the breaker block. This white candle becomes the breaker block. Supposedly, we were expecting the price to react from this zone and went lower. But if we were to look at the left side of the chart, this one is a demand zone, or what we call a order block. Because of that, we repeat step 1. Step 1, basic movements that we can see. Step 2, we can see a retest of the breaker block. So this is step 1. Step 2 is to find the left side of the chart, which we have an order block here. And then step 2, we have done it. We're going to look at step 3. Step 3 is to enter a trade. How could we enter a trade? You can see that you can enter exactly at the breaker line. So the breaker line is exactly at this wick. So we're going to enter exactly at that wick. Don't go to middle because this is not an order block. If you're familiar with order block, you might say, well, I'm going to enter at the middle of the breaker block. This is usually risky because if you were to have done that, you would not have got to an entry field. Because when you're trading breaker blocks are when the market is trying to reverse. Remember, if we are looking back at the original chart, when we're coming down and then we actually reverse and touch into the breaker block, Remember that many traders might use Fibonacci's to enter their position. They might enter at here, but the price usually retests the breaker block here and then pushes higher very quickly. Because of that, a lot of Fibonacci players, a lot of order block traders are going to miss out because they have their entries here, they have their entry here, they have their entry here, and Fibonacci traders are going to have their entry here. And this is exactly when they're going to miss out, because only traders who are using breaker block can get filled and actually participate in the trend. This is because when the trend is very potent and aggressive, then only the price will react to the breaker block. And to me, in my experience, breaker block has about 60 to 70% success rate. Now, of course, you can try to increase the success rate by incorporating other strategies, but in general, the strategy itself is quite successful. But you have to be careful because you don't see breaker blocks everywhere on the chart. But when you see it, what happens about depending on your time frame. But when you see it on a high time frame, the higher the time frame, the more reliable it is. So this could be your stop loss, okay? You could put it here, you could put it here, depending on your preference, okay? Target somewhere here, okay? And your entry would have gotten filled. So thank you for watching to this video, and I hope you liked the video. If you did like the video, consider liking this video or subscribing to this channel. Now, until then, I see you in the next video, and hope you have a great day.